You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim. I am looking forward to 2014.
Well, after gold hit that super low back in June, it climbed and now it's fallen again, I guess, on news that the U.S. Federal Reserve is finally going to start tapering its bond buying program, but only by $10 billion a month, and no interest at all in having higher interest rates. How's this affecting gold and silver?
Sentiment is the 800-pound gorilla right now. It rules everything. And when you have major changes in the market, the real reasons don't come out until later on. So if a person is going to make a decision now based upon the reasons that are being floated around, they're going to be misled, to say the least. In my view, nothing has fundamentally changed to alter the very bullish case for the precious metals. And I think as we move into 2014, we're going to see that that's going to play itself out.
Well, with gold near $1,200, and we know what the cost of production is, a lot of producers, of course, would just shut down their mine or stockpile it instead of putting it out physically. But on the physical front, we have people like Jim Rickards saying, when things do turn around here, you're going to find there is no gold to buy. The shelves have been stripped bare, and I believe stripped bare mostly by China.
That's true, and there's a lot of indications that perhaps the entire global annual supply of gold that can be produced in 1 year has been purchased by China this year. And so, as David Morgan has always said, he said this many years ago, he said, in order to break the back of the paper market, they're probably going to have to buy the last ounce of silver and gold out there that's available to do it. And I think we're moving into that kind of a space. When the realization hits just how much gold and silver is going into strong hands, I think you're going to be surprised at the strength of the turnaround with the miners moving right along with the increase in the price of gold and silver.
What would happen if the price of gold went below $1,200? Would that spark another wave of selling?
It could. There's no way to know, but it would certainly take out the last of the weak hands. And, you either have a premise that you follow or you don't. And the people that believe that it's going to go to $500, I guess you give up and leave. But if you do that, then you don't come back in and can't play anymore. So nobody knows the future until it gets here. But my belief and what I'm acting on is that we are going to see, regardless of where prices go over the very near term, we're going to see a very strong metals and share price market going into 2014. That's a minority view right now, but the only way that you make significant money is to be taking a contrarian minority view. And the greatest traders that I have studied over the years all view things like that. It's not an easy position to take, but you calculate what's going on, you buy the very best miners, you get yourself some physical, and you stay off of margin. And then finally, when you've done those things, if you've got your portfolio the way you want it, you either put in a few stink bids below where prices are even now that you might get filled at a limit order, at a good to cancel order, or if you're fully committed, you just, as Stanley Kroll would say, you be right and you sit tight. And you'll find out if you're going to be right. But right now you sit tight and you enjoy the holiday season and you wait for the realization to take place on what you have put together in your trading plan.
Is it true around Christmas time people really aren't interested in the markets or gold or anything? They're more focused on family and friends.
That's certainly true, and I think that is valid. But there's enough people that are involved in the market to swing things back and forth. And if you get an opportunity to buy the stock you've always wanted at a price you couldn't believe, well, then that's a nice Christmas present for yourself. But I think that we're into fascinating times here, and as I look at the fundamentals, I keep going back and reviewing my case to see if it makes sense, and that the people that I respect in this field that have been right more often than they're wrong, and I keep concluding that this is the place I want to be. It's not comfortable right now. In fact, I ate a bowl of puff millet this morning to kind of take away some of the antacid. But you know what? I think it's going to be the place that I'm going to be very happy to be as we move into 2014, because I think that we're going to be on the right side of 5,000 years of history.
David, what about other precious metals? I've heard palladium has been doing actually quite well, perhaps being supported by the Russians who want to stock up on it.
The PGMs, especially platinum and palladium, have held up much better than gold and silver, and they have their own metrics. There's some similarities in terms of factors. They are an industrial metal primarily, but there's an investor component to it, and they have an issue of real constrained supply because of questions where most of the platinum and palladium are mined, and this could go on for several years. So it's been my premise. You and I have talked about this for probably about 18 months. It's my belief that platinum and palladium will lead the gold and silver parade higher based upon mostly their own metrics, and that the precious metals as a group will be rising pretty strongly in 2014.
Is the reason for platinum and palladium doing well the fact that they're industrial metals and not just for jewelry?
That's a big factor because that's their predominant use for sure. And with all sorts of new applications coming up, that's a very supportive influence. You know, Jim, we have been through a lot of pain in the last 2.5 to 3 years. I don't think anybody thought we would get the kind of decline that we did from 2011 around, I remember the very top at that point of the market in the late April, early May. And it's been up and down and mostly down since that time. But the more I look at it, the more similarities I see with what happened in the middle of the last great gold and silver bull market in the 1970s. And after prices declined substantially and taken out all the weak hands, they turned around and made massive gains over the next few years. And I think for slightly different reasons, but also because now global participation, whereas that was almost a local phenomenon, so to speak, I think we're going to see the same kind of a thing going out over the next few years. I think we're in the middle or maybe just past the middle of this massive secular bull market. And the last chapters of that market a few years out are going to be something to see. And I think long before that, those people that hold on and have quality positions are going to find themselves making healthy profits well before we get to the public mania phase.
And as we know, usually by the time the public jumps on a trend, they've jumped on a train that's about to come to a screeching halt.
Well, that's true. You look at what happened to Bitcoin. You know, nobody wanted to buy Bitcoins when they were $7 or $8 a piece, but now that they've been as high as 1,100, everybody wants in. So that's just human nature, and you either go against human nature in a calculated way, or you don't. You know, as Rick Rule likes to say, you're either contrarian or roadkill, and so it's hard to do. And most people are simply not willing to put forth the effort and the stamina to do it. And if they're not, that's fine. But if you want to try to rise above the mean, you got to do it. And there are no guarantees in this life, but I really believe that the probabilities favor success when you look at investment in that way.
David, thanks a lot for chatting with us. We're going to have a good holiday, aren't we?
Sounds good to me. And my last comment to people for this year is, we've gone through the pain, now get ready for the gain.
My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard. Happy holidays.